Okay, for questions 4 here, we already done parts of that one. For questions 4. Okay, the last time that we stop here is we'll have disagreements on the NCI. If you still remember last time, isn't it? Okay, so we try to look at what we have here. Okay, so I just want to share with you www done. Okay, wait. I just want to find the file for that one. Yeah? Okay, so we're going to share with this one. Okay, so I start sharing your attendance. So I'm going to share with you the answer for your tutorials. Which one that I have now? So I need to check first. Okay. Okay, so this is what you have the answer for the tutorials. Questions 4 last time. Okay, we still argue on this one. Okay, about the NCI last time. Okay, so I realized that there's a mistake in my answer, so we going to discuss again for the NCI last time. Okay, for the NCI here. So last time, if you still remember that the answer that I provide to you here is with minus the 9850, sorry, 9852, then we minus 3 for a dividend. So that is not supposed to be here, the 3 here, because the dividends here, the dividends that we minus is supposed to be minus from, you need to minus from return earning, not to minus from a profit for the years. Yeah? So that's why. So I'll provide you with the new answer after the revised one. So this one will be the new answer. I think that your friends already give an answer this kinds of figure last time. Yeah. So we're going to continue again, made some amendment to the previous answer. We already changed. So remember that when you have a dividend, dividend is not minus from the profit. Currently the profit, going to use the amount that you're going to pay for a dividend is from the returns earning. Yeah? So we're going to calculate again, recalculate again the amount of the NCI. Yeah? Okay, for the NCI that we have here is for the profit for the years. We are going to use this amount, the profit with the year. Okay, without minus dividend, just use the profits given there. The profits given in the question. So the profits given in the questions here is 9852. I'm going to use that one, 9852. Okay, and then from then 9852, we're going to minus. Okay, the amount that we're going to minus here is URP carry forward. Going to minus the URP carry forward. But the amount of URP carry forward here, it should be net after tax. So that's why we time with 76%. Because this one is already net after tax. So the URP carry forward 600 times with 76. So you have 456, and then plus URP brought forward. So the URP brought forward also need to have amount which is net after taxes. So 790,400, and then plus depreciation adjustment. Depreciation adjustments here is the depreciations over provided. So once the depreciations over provided here means that it's going to increase your profit. Yeah? So that's why we need to add. So the amount that we have here for depreciation over provided here is 400. That 400 also need to have amount which is net after tax. This 96 here is a net after tax, the amount of tax, or you just might have here 400 times with 76 like the one that we have here. Okay, 400 times with 0.76. So you're going to have 304. So at the end, the amount of the profit after the adjustment for the NCIC will be 10940. From that time 10940 here, we're going to time with 25%. So 25% here is the shares of the NCI. So we're going to have here debit NCI segments of comprehensive income. This amount to 622,600, and then credit NCI for the segments of financial position. So this is the things that we going to discuss for the, we keep this one KIV for last class we discussed today. So there is an amendment to the answers here. So we're going to have 2622,600. Okay, the next one is the shares for the NCI is the shares for the net asset. So the net asset, you have the shares capital, 80 million times with 25. So you have 20 return profit here, 22,500. 22,500 here minus this is a return profit, which is brought forward. Okay, brought forward. 790 is the URP that is already recognized here. Okay, and then minus 15,1520 here is the URP for the URP that you have here is for the machine, machineries for the machines. Okay. Why don't plus with 790? 790? The URP 790? P plus, isn't it? Oh, okay. Why don't we plus? Okay, can you refer back to the journal entry that we have for this one, for the 790? 790 here is debit RE, isn't it? Laura, can you refer back to this one? 790. Can't remember which one is your journal entry? 790. 790. Wait, where is the journal entry? 790. So this one, Nara, the 790 here, we debit RE. So once you debit your RE here, means that you need to minus here, because we debit RE should be credit, isn't it? Okay. Is it okay, Nara? Okay, yeah. Okay, so that's why we need to minus that amount. Okay, so RE, because the RE was debit, and then 1520 here is for the URP for the machines. So you're going to have here 5047 400, revaluation reserve 200 500 because 2 million times with 25, and then the NCIs that we have here is 25 547 400. Okay, and then the next one is your statements of comprehensive income. So the turnover. So you need to refer back, items that we have here. I just give you the figure. The adjustments here plus or minus that we have here is from journal entry. You need to refer back to the journal entry for the plus or minus that we have here. So you have here for the turnover 94, COS 31, gross profit, and then gain on disposal of land, dividend income becomes zero after the adjustments there. And then profit before tax, tax expense, and then we have new items here, shares of associate profit. Okay, and then we have a profit for the period. So profit for the period here need to allocate between parent and NCI. Okay, and then we have gain on revaluation. So gain on revaluation is item for the comprehensive income. So at the end, we're going to have the total comprehensive income. So total comprehensive income here is the one that you add together. This 20 plus 2 here. So you're going to have 22, 241, 340. Both of this one need to allocate to parent and NCI. So we're going to have two profit attributables to. Going to have two items here. Okay, the first item for the profit attributables to here is the one is the net income. Okay, from the net income, the amount of net income you have here is 20,241. 340 from here you have this item. Okay, this one going to allocate to parent and NCI. So for NCIs, we already allocate to 622,600 from the previous journal entry. So remaining balance to the parents here will be 17,618,740. Okay, this one is the first attributables to. The second attributables to here is related with the the segments of comprehensive income. Okay, for this one, the comprehensive income also need to allocate to parent and NCI. But remember that for amount that we allocate to the NCI is the same as what we have for the profit. Yeah, because later on this one will become one of the item in the statements of financial positions here. So if you look at here, the NCI amount both is the same. The difference here for the parents here, this one will be 17 and then this one become 19 because of the extra items that we have previously. Here is a gain on revaluation. So, okay, gain on revaluation here is a part of a comprehensive income. Okay, so you're going to have the NCIs here. It must stay the same amount. The difference here is only for parents. So you're going to have that one. So remember that when you have item for a comprehensive income, you're going to have two items that are attributable to. One is based on the net income. The other item is based on the comprehensive income. Yeah. Okay, just check your answer. Okay, and then copy that one. Yeah. Okay, this is a preparation of statement of changes in equity. Yeah. So the preparations here is a little bit complicated here. So the formats that we have here for statement of changes in equity here, we're going to have a shares capital. So for shares capital, normally there will be no changes in the shares capital. Okay, you have a return profit here. So return profit brought forwards here. Okay, to find a return profit on balance on 1st of January the 98 here is 92,750 plus this one is a parents brought forward. This one is also the NCI. Minus 9 here is adjustment to parents. NCI 790 here is the portions of the RE that is already debit side. And then this one is for the URP. This one is for the machine. And then 5047 here is allocation to the NCI. Okay, you're going to have 98, 9, 8, 200. And then profit for the period for the parents here. And then proposed dividends, refer back to the journal entry, and then dividend paid here. Okay, so at the end you have 93. Yeah. Okay, for reserve we have 17.5 plus another 2, so 19.5. And then for the NCI you have 25. 547 here is the last journal entry that we have here. And then plus with the profit, shares of profit, minus a proposed dividend, and also minus the dividend paid. At the end, the balance for the NCI will be 25. Yeah. 630. Okay, so these items here, this balance here, going to be transferred to the equity sections in your statements of financial positions. You're going to transfer the ending balance in the equity sections in the statements of financial positions. Okay, just copy that figures here. Okay. And then the next one, you're going to look at the statements of financial position. Okay, for financial position, just add the assets or the assets between parent and subsidiaries. Okay, and then look at the item here for the investments here will be 0 because we're going to eliminate the investments. Investment in towers here is in terms of the associates. We're going to look at refer back to the journal entry. Plus or minus here is from your journal entry here. Okay, and then we have one new items here which is a goodwill on consolidation. So that is a new item. And then the other asset is a similar, just total up between parent and subsidiary, make an adjustment. Okay, and then the other ones you have sections for equity here. So if you look at here, the sections for the equity, all of this amount here is come from your statements of changes in equity. Statements of changes in equity. Okay, so you're going to have RE, ordinary shares, RE, revaluation reserve, and the NCI amount. So this one is already come from the segment of changes in equity. And then for your current, non-current liability, you have a loan, deferred tax. Okay, plus minus here is from the journal entry. And then you're going to have here is the accounts payables, just total up, creditors, loan. If you look at here, the loans here, you already eliminate. Say loan payable to, okay, already eliminate. Okay, dividends payables into for parents here. Okay, the amount for parents here. Okay, and then total liability. Okay, at the end, you're going to have 428, 303, 500. Okay, any different answer that you have for this one? You have different answer for this one? Please check. I think that your answer is a difference. So check the figures and try to look at which part that you understand. Please study these questions for because this question 4 has a combinations of the subsidiary and also associate. If you refer back to the previous tutorial final exam questions, they're going to combine the subsidiaries and you may have associates also. Okay, so that is for questions 4. So any of you have a question for questions 4? quite a details for questions for a good practice. This is a good practice for you for your mid-sem. Okay, so please practice on these questions once again. Okay, and then we're going to look at for questions 5. Stop sharing this one for a while. We're going to discuss questions 5. Oh, sorry. Okay, okay. Sorry. Again, your questions. If, hmm, hmm, hmm. Propose dividend. We're talking about propose dividend. It's not mentioned in the additional informations. Okay, but you have that one in the statements. Okay. So because the dividends here is going to pay to the parents, isn't it? So we need to. But most of the time it said that prepare a relevant consolidated journal entries here. We're going to eliminate that one. Like the one that you have for the loans payable, isn't it? Loans payable last time? Is it mentions about the loans payable? Loan payables to Globe? No, isn't it? But we still need to prepare elimination consolidated journal entry for that one, isn't it? Okay, so the same for that one, yeah? Okay. So we proceed to questions 5, yeah? Okay, stop sharing this one for a while. Now we're going to proceed with questions 5, yeah? Okay, so we're going to look at questions 5. So now with you, what you have now, is it questions 5? Or not yet? Okay, I'm going to share it with you again. This is what you have, isn't it? Question 5. And this one is already done for this one. Okay, we're now going to look at this one, question 5. Okay, so for question 5, we're going to look at here. XT bought 70% interest in the voting equity on 1st of January. The purchase price was 2.5 million. The agreed purchase price was 2.5 million. Okay, so this is what you have for the COI. COI, you're going to have 2.5. Okay, and then 30% of the NCI has a fair value of 1 million. And then the net identifiable asset was 3 million. It was decided to apply the fair value method to calculate a goodwill. So fair value method to calculate the goodwill means that the NCI here should be at fair value. I said that to calculate a goodwill. So we're going to have here the value of the NCI here will be 1 million. So altogether you're going to have the goodwill here is a combination of COI and NCI. So we're going to have 2.5 plus 1. And then net identifiable asset is already given here. Okay, it's already 3 million here minus 3. So you're going to have here 3.5 minus 3. So you're going to have 0.5 or 500 as a goodwill. So the goodwill here will be 500. Okay, just analyze the information here. Okay, this is the statements of financial position, statements of the income statements and comprehensive income. So the thing that we're going to focus here is on this profit. Profit for the year 700. Okay, and then the next one, what you have here. Okay, dividend paid 100. So you have a dividend paid of 100. Okay, and then you're going to have here this one. Another thing that we need to consider here about this one. Okay, the RE brought forward. So be careful with this one and also this one. Okay, this is the financial position. So we're not going to look at that one. We're going to look at the additional information. Okay, for additional information here, we are going to analyze this one. During the post-acquisition period, FD sold goods. So FD sold goods to XT means this one is a upstream sales. This good was sold at a gross margin of 25% of selling price. 30% of would remain in the inventory. So you need to calculate for the URP. So 30% time with 800. So you're going to have here is 200 and Yeah. Okay, that 200.40 here is the amount of inventory. So we need to time with 25% because the gross margins here is 25%. So we're going to have here is equals to, how much we have this one, 60, yeah, 60. Okay, and then it said that the corresponding ending inventory amount in the period prior year was 400. So 400, so brought forward. This is URP brought forward. It's a 400 time with 0.25 here. So you're going to have here is a 100. Okay, so going, okay, no post, the tax effect. Okay, that is a tax effect. So just prepare the journal entry for this one, yeah. Okay, for the journal entry, the first thing you need to record for the sales. Just record for the sales. Going to debit your sales. Okay, and then credit COS. Okay, the sales that you have here is 800. And then also the COS. Okay, the next one, you need to record for the URP for a current year. So current year URP and then credit inventory. So you're going to have 60. Okay, and then there is a tax effect. Okay, so once there is a tax effect, you're going to debit a deferred tax and then credit tax expense. So deferred tax here, 25%. Tax rate is 25%. We're going to have 15 and 15. Okay, and then the next one, we need to prepare the journal entry for the URP last year. So URP last year is RE, debit the RE, and then going to have tax expense. Okay, tax expense and then credit cost of sale, 100 here, 75 for the RE and then 25 for the tax expense. Yeah? This one is to record for the last year URP. Yeah? Okay, so any different answer that you have for this one? Oh, sorry. Okay, so similar with this one. Okay. Question 5 as compared to question 4, 5 is easier as compared to 4. Okay, so we're going to proceed with the next one. So the next one, we're going to have the second one. FD declare a dividend. Okay, the next one, FD declare a dividend of 100 during the year from a post-acquisition profit. XT recognize the dividend as a investment income. Yeah. So based on the one that mentions here, instead of put it as a dividend income, you're going to put it as a investment income. Yeah, because it said that they recognize the dividend as an investment income. Yeah. Okay, and the amount here is 100. From that 100, a parent entitled for 70%. Yeah? And then NCI another 30, and then credit the dividend or dividend paid. Yeah. Okay, so you have here hundreds. Okay, that is what we have for a dividend. Yeah? Okay, item number 3 here. Okay, XT sold land to FD 200. The land was bought on at cost of 120. The profit include within others income. I put it under others income. Assume that there is no transaction and no taxation impact. So if you look at here, lands that you have here is 200. And then you bought at a cost of 120. So you're going to have a profit of 80. Yeah? So you're going to debit profit from sales of land. Okay, and then credit land. So you're going to have 80. Okay, no tax is fact. For this one, is no tax is fact. Okay, if it doesn't mention anything, you need to calculate for the tax effect. But it's mentioned here, no tax, so just put it as a profit and then credit land. Yeah? Okay, and then the next one on 30th of June 2020, XT sold a plants to FD at a fair value of 600. Yeah? So this one is a downstream, yeah? An increase of 200 from a carrying amount. Yeah? So it means that the fair value was 600. The book value here will be 400. Yeah? So the difference between these two, you're going to have a profit. The amount of profit here is 200, and then this profit going to be realized for 4 years. How are we going to realize it? Through a depreciation. Yeah? So every year we're going to have 50 realizations of profit. Yeah? Okay, so and then it said that record the profit within other income and charge depreciation within operating expense. Okay, so you're going to have here, you're going to debit profit from the sales of plant. Okay, the profit that we have here is 200, and then credit plants or equipments here 200. Okay, and then you need to calculate for a deferred tax because it doesn't mention anything about the no taxation impact. So you just calculate for a deferred tax and then credit tax expense. So 200 here time with 25%. So you're going to have 50 and then 50 here. Okay. Next thing, we need to provide a journal entry for depreciations over provided. The amount that over provided here is 50. Yeah? So debit accumulated depreciations, credit depreciation, expense of 50. Yeah? Okay, so this one, debit tax expense. Okay, going to the credit deferred tax. The amount that you have here is 50 times with 25%. So you're going to have here 12.5. Yeah? Okay. Is it any different answer that you have for this one? Any different answer? Is it okay with this one? Okay. So if this one is okay, we're going to proceed with the next one. Yeah. Okay. Item number 5 here. Okay, XT has 65,000 trades payable owing to FD at the year end. So trades payable. So for trades payable, you're going to debit trades payables and then you're going to credit trade receivables. So it's 65. Yeah? Okay, just eliminate that one. Yeah? Okay, and then the next one, goodwill was reviewed for impairments on 31st December and a charge of 25% should be applied. So you have the goodwill impairment. And this is a new one. Please pay attention on this one. Goodwill impairment, and they're going to include within the operating expense. It's going to be a part of operating expense. So you calculate for the goodwill impairment. So goodwill impairment here is 25%. Time with the amount of your goodwill here is 500,000. Yeah? So you're going to have here is equals to 125. 325. Okay, so now I'm going to prepare a journal entry for this one. So journal entries here, it said that the goodwill impairment should be included within operating expense. So we're going to debit operating expense. Okay, and then credit a goodwill 125. Okay, 125. Okay. Okay, there is no post reversion, side effect. Okay, the company remain. Okay, that is what you have prepared the journal entry. Okay, so we already analyzed all the informations that we have here. So the next one we need to prepare and we need to calculate for the NCI. Yeah? So NCI here we have two items. One is for the profit and then the other one is from the net assets. Yeah? Okay, we calculate for a profit first, shares of profit. So shares of profit for the year, going to have here is 700. Okay, and then you're going to minus URP carry forward. The URP carry forward that you have here is 45. 45 here is 60 minus 15, which is the net of the tax. Yeah? And then plus URP brought forward. Okay, URP brought forward that we have here is 100 minus 25. So you're going to have 75. And this one minus that. Yes. Okay, and then minus impairments of goodwill. Okay, this one. Because the goodwill, impairments of goodwill going to increase the operating expense. So one is increase the operating expense is going to reduce the profit. Yeah? So that's why we need to minus impairments of goodwill. The amount that we have here is 125 here. Okay, so at the end, we're going to have here is equals to 605. Yeah? Okay, for 605 here, NCI entitled for 30%. Yeah? So we're going to debit NCI and then credit NCI for the okay, so we're going to debit NCI for statements of comprehensive income and then credit NCI financial positions. Yeah? Okay, so you're going to have here 30% times with 605. So you're going to have 181,500. Okay, this is the first one, shares of profit. Okay, the second one here is shares of a net asset. Okay, we're going to have shares capital, returns earning, revaluation reserve, and then the goodwills here. Okay, and then the NCI. Yeah? Okay, goodwills. Going to look at this one. For shares capital, 30%, going to have 360. And the RE, you have 303. Later on, I'm going to inform where you get these figures. Yeah? And then this one is 255. This one is 100. Yeah? 100. Okay. 100. And then the NCI you're going to have here is 1018. Yeah. Okay. So the shares capitals that you have here is 1.2 times with 30 million. 1.2 times with 30 million. Okay, RE. Okay, RE amount that we have here 303. Where to get that? 303. Okay, to get that one 303. Any of you? 303 here? Any of you? 303. Where this figure come from? Where that figure come from? This 303. We need to do adjustment for depreciation. Which one? For which one? Sorry, sorry. Adjustment. Uh-huh. Mhm. Oh, you mean profit for the year? Okay. Okay, okay. I need to check for this one. Okay. Let me something here. Okay, so this is what you have. Okay, profit. Oh, you mean that the journal entry that we have previously about this one, isn't it? This one, isn't it? Oh, no, this one. The plant. This one, 50, yeah. Okay. So, okay, depreciation expense, so 50. Okay. The profit for the year, 700 here. Okay, so you RP already done. Beginning inventory done. Impairments of goodwill. So you means that you want to minus this one also, not minus, plus. So I'm still saying about this one. Okay, wait. If you want to plus this one, what happened to my pen? Okay. So you said that you want this one, we need to plus the amount. Plus another 50. Okay. 50, the amount means that already net after tax. This one is not yet net after tax, isn't it? Net 50, you're going to minus 12.5. Okay. Then what it mentions about the depreciations here. Accumulated depreciation. Okay, so I need to think about this one also. Why do we need to suppose that your arguments here you need to plus this amount plus a minus 12.5, isn't it? So if you total up that one, how much you have for this one? Profit for the year 605 plus another 37, isn't it? 37.5. So you're going to have 642. Isn't it? 642. 500. Okay, and then you're going to time with 30%. 192750. 75. That is your answer. Okay, there is a logic also about this one. I'm also thinking about this one. Based on the journal entry, suppose that because if you look at the operating expense, we also minus, isn't it? The URP also. Okay, so I need to check this one answer. Okay, because this one is the one that I purchased from the providers. Okay, so NCI still have a problems here. Okay, keep this one for the next class. Okay, or why I'm have a break for this one, I'm going to ask about this one. So means that when you time this one with 30%, so you're going to have 192, isn't it? So for this one, we keep for a while. Okay, yep.
Inside the slide, the downstream sale, it
Mm,
mentions that it won't affect the
mm,
subsidiary or the
mm,
NCI
mm,
for
mm.
downstream sales.
Okay, I get what Chang. Okay, thank you. Okay, because that one is a downstream sales, so the downstream I really forget about that one. Okay, XT so plants. Okay, so one XT so plants here means that does not affect the profit of the subsidiary, isn't it?
Yes.
So once there is no effect to the profit of subsidiary, so the one that you calculate for the NCI here is only the effect of profit for subsidiary. Okay, so in this case, the plans here is XT sold to FD. So XT is a parent sold to a subsidiary. So profit that effect here is only profit for parents. Okay, so means that there is no effect to the subsidiary profit. So the NCI, the one that we calculate for the NCI is based on the profit for the subsidiary. Okay, I got that one. Okay, so wait, is it okay with that one? No, wait, Paul, isn't it? Paul, is it okay? Okay. So we are using this figure, eh? Okay, thank you, Chang. I realized about that one. Okay, about the upstream and downstream. Okay, so there is no changes with this answer. Okay, we're going to use this one, 181,500. Okay, 181,500, same thing. Okay, and then for the so do not confuse with this one. So we're going to cancel this one. Okay, been due to the downstream sales. To subsidiary profit. Okay, so we don't have to consider about that one. Okay, so the shares capitals, you have that amount, 1.2 times 30%, and returns earning 1085. 1085 here is a returns earning brought forward. Okay, returns earning brought forward. Okay, minus 75 here is the journal entry that we have for the URP previous year. URP previous year that you have here is it URP previous 75? What do you have? Yes, URP previous year 75. Okay, so time with 30%. Okay, revaluation reserve 850 from the questions that you have there, 850. And then goodwill is 500 minus 400. We haven't calculated actually for this one. We already calculate goodwill here. So I just show you how to get this one. Okay, the goodwill that we have here is 500. The amount of goodwill we have 500. So now we want to look at how much a portions of goodwill to parents and to the NCI. Okay, so for parents portion from that 500, parents that I have here is 2.5 is the COI minus net identifiable asset. So net identifiable asset here is 70% time with 3 million. So minus 2.1. Yeah. So then you're going to have goodwill for parents here will be 400. So for parents 400 means that for NCI here will be 100 here. Okay, so this is what you have. Okay, so that is the amount of the NCI. And then we miss one journal entries here is to record for the parents, for parents eliminations of COI. Okay, so for parents here, so parents that we have here, shares capital. This one is for parents here. We don't prepare for that one yet. Okay, for parents, we're going to have 840. And then we're going to have RE for parents here is 665. And then revaluation reserve going to have 595. And then goodwill 400. COI here will be 2.5. Yeah. Okay, so this is the journal entry to eliminate for the COI of parents. Yeah. Okay. So any questions for the one that you have for this one? I just show you for this the statements, yeah? The gross profit. You just copy the figures that you have there. So this is what you have. Okay, the sales revenue just minus 800 here is the sales in the current year, intra-group sales. Why? Okay, so this one, yeah, minus this one, the intra-group sales, COS. Okay, minus 60 is for the URP, plus 800, and then this one adjustment. You look at the adjustments that we have here. Okay, operating expense minus 125. 125 here is for a goodwill, goodwill impairments of goodwill. And then 50 here is for a depreciations of provided sale. Okay, so that is well. Other income, 40, 280. 200 here is a profit from the sales of plants. Profit 80 here is the what we have here. 80 here is from the sales of land. Plant and land, that one we have here. Okay, the first one is for plant and then this one is for land. Investment income into minus 70 here. So 70 for investment income here is a dividends. Dividends. Okay, so profit for the year will be 1877.5. Yeah. Then going to allocate to NCI and parents. NCI here based on the journal entry going to have 181.5. So to the parents we're going to have 1696. Okay. Okay, done with the income statement. Okay, so the next one we're going to have the statements of financial position. Okay, for financial positions here, this is what you have. Okay, total asset and total liability. That is adjustment. Yeah? Goodwill minus 125 here is because of the impairments. Impairments are here. Okay, so plus or minus here is come from the journal entries. Okay, any different answer that you have? Any of you have a different answer? Except for the first one, depreciation that you add to the NCI, so they're going to affect your NCI here. Okay. Okay, so any questions that you have here? Which part? This is your asset. Together, total asset. And then your equity adjustments here, you just plus or minus here. So it takes time to discuss for tutorials here. Okay, so any of you have a questions? Going to have another half an hour. So half an hour, we're going to proceed with the chapter 3. Okay. So before we continue with the chapter 3, do you have any questions here? 2 hours for your answering the questions, and then another extra 15 minutes to upload your answer. So 2 and 15. So I haven't looked at that question set. Are we going to discuss types of question this coming class? Is it okay? Because I just received that I'm going to upload in your online the pledge form together with the with the pledge form and the answer sheets. You just print the answer sheet and use that answer sheets to record or to prepare your answer using the answer sheets given. Okay, I'm using that one. Okay. So your exam, how many hours? Oh, we're going to start at 9 or 9:30? Let me check on that one. I already forget about that one. I think that 9:30. Maybe we need to discuss details again. I missed the items. Maybe I need to find the details about your exam. It's I think that 9:30. 9:30 until 11:45 because we're going to allocate you 2 hours for the answering, and then another 15 minutes for the upload the answers. Please use when you submit the questions, the answers here you need to submit. The answer should be written on handwritten on that answer sheet provided together with your pledge form. The pledge form here will be at the end of the, let's say you already answer for 4 pages. The last pages when you scan, make sure that the last pages here is, the last page here is your pledge form. Yeah. Any other question? Detail about your mid-sem. We're going to discuss this coming Thursday. Yeah? Okay. I think that will be on 9:50. Yeah. I need to check that one. I think so. 9:30. Because we haven't discussed the questions yet. So I don't know the formats of the questions. Okay, details is coming Thursday. Yeah? But you're going to have questions more or less like question 4 and question 5. Yeah? Please check on that one. Redo that one again for question 4 and question 5. Yeah? Okay, any other questions that we have here? Do you have any questions? No questions? Say no questions? Before we proceed with your note, we need to proceed your note with your notes, at least a little bit only. Okay, so ready with your notes here. So done with your tutorials. Is it okay with you there? So we're going to proceed with your notes. Okay, sorry, a little bit rushing because topic 3, we have about 180 slides. We will take time for topic 3. Okay, so for the next class, we're going to allocate maybe 15 minutes or 20 minutes to discuss if you have any questions. And then after that, we're going to proceed with your note chapter 3. Okay, now we're going to stop sharing your tutorial. So we're going to proceed with your notes. At least we'll discuss a little bit on your notes here. We have to proceed with your notes because it takes about 10 hours to finish with this topic 3. So many things that you have in topic 3. Okay, so we're going to, last time we stopped up to slide 15. I still remember slide 15, isn't it? Okay, done about this one. Okay, so last time, what we learned last time, so this is what you have for your notes. You are ready with your notes? No? The note with you?
Yes.
Okay, so we're going to proceed with the notes. Okay, so last time we stopped at slide 15, isn't it? So slide 15, what we learned last time or last class, the one that we learned last class is regarding the acquisitions. Step acquisition. Step acquisition, the first one we look at the piecemeal acquisition. So piecemeal acquisitions, the things that you have in that piecemeal acquisitions here is when you acquired, you start with your simple investment and then you add some more investment, then it become a control. Let's say you start with 15% and then you add some more 20%, not yet control, and then let's say add another 20%. So once you have more than 50%, then it's considered that you have a control. So start when you have more than 50%, last date, this date, then you're going to prepare a consolidated financial statements. Okay, we also learned about the acquisitions during the year. Okay, so once you have the acquisitions during the year, you're only entitled for a profit after acquisitions. So the profit after acquisitions here, you need to portion with a period here. Okay, for examples here, you acquired, okay, you have a control start from 1st of June. So you are entitled the profit from for 7 months, starting from June until December. Because you acquired on 1st of June, so you're entitled for a profit for 7 months. So every single item that you have in your income statement need to portion with 7 over 12. Yeah? So this is what you have for the acquisitions during the year. Okay, so we're going to continue for the, so you need to find, the first thing that you need to know here, you need to find gain or loss on remeasurements. Yeah? So gain or loss on remeasurements here based on the difference between fair value of the previous investment minus the carried amount. So you're going to have either gain or loss. But most of the time here, we're going to have a gains because the new investments, the investments that we have here, going to have an increase in value. Okay. So we're going to continue with slide 16. Okay, for slide 16 that we have here is about the step acquisitions. Just still under step acquisitions here. Okay, now we're going to look at the reclassifications of component in others comprehensive income. Yeah. Okay, if the acquirer recognize changes in the value of the equity interest in the acquiring in others comprehensive income in a prior reporting period, the amount should be recognized at the same basis as would be required if the acquired has disposed directly or previously held the equity interest. So quite confusing sentence that we have here. Okay, for examples here you have the investment. So the investment, when there is an increase in the value, okay, the increase in value here transfer to others comprehensive income. Yeah, so the increase in value was recognized in others comprehensive income. For examples here, you have the former equity investment designated as a fair value through others comprehensive income. So you're going to retain it under a fair value reserve. This fair value reserve was under others comprehensive income. Okay, so once you have a step acquisition, you need to transfer from others comprehensive income, the increase in the value, which is the profit that you recognize under others comprehensive income, need to transfer to return earning. Okay. Later on, we have examples. Yeah? Okay, let's say previously your percentage of share, you only have 15%. So 15%, let's say the value here is 10,000. And then after that, the value increased to 15. So the increase of 5,000 here is considered as a profit of 5,000. Let's say this profit was transferred to others comprehensive income. So once you have the step acquisition, this profit from others comprehensive income need to transfer to returns earning. Yeah? So that's why I said that you're going to transfer the profit from others comprehensive income to the return profit, yeah? In the statement of changes in the equity. That one is required by the MFRS 9. Yeah? Okay, and then the other one, if the investment is in terms of associate. So in terms of associates here is when the share is 20%. Okay, when the shares is more than 20% but less than 50%, so your investment is considered as an investment in associate. So once you have investment in associate, so any gain from the exchange translation reserve, actually this one in topic 5. So but if you have a translation reserve, should be recycled or reclassification to the P&L. So if you have the exchange translation reserve, this one need to transfer to income statement to P&L. But if you have a revaluation reserve, going to transfer direct to returns earning. Yeah? Revaluation reserve transfer to returns earning. Yeah? So the things here, if you have others investment, types of investment, this is your type of investment. Okay, type of investment, for example, others investment which is less than 20%. And then the other one is associate when the investment is more than 20%. So for others investment, if you have a fair value, increase in the fair value, going to recognize as a gain. This gain was transferred in others comprehensive income. So once you have a control over the company, this gain going to transfer to a returns earning. You're going to transfer that one to return earning. But if your investment here is under associate, categorized as associate, if you have a exchange transaction reserve, this one going to be transferred to P&L. But if you have a revaluation reserve, this one going to be transferred to returns earnings. So it depends on what type of your investments. So the treatments, where we're going to transfer the gains here, either to the returns earning or to the P&L, profit or loss, is depend on your previous type of your previous investment. If your investment is less than 20%, which is considered as other investment, changes in the value going to be transferred from others comprehensive income to returns earning. But if your investment is in terms of associate, when you have in that associate, you have the exchange reserve, transaction reserve, and going to be transferred to P&L. And then for revaluation reserves, going to transfer to returns earning. I haven't seen example about this one yet because this one is in a topic 5. So you just focus on this one. For the investment in associate, once you have a revaluation reserve, that revaluation reserve is going to be transferred to returns earning. Okay, we try to look at these examples. Okay, so these examples here as end of financial year 2017. So this is the following of the NCI that you have here. Seroja Berhad. Okay, Seroja Berhad has two types of investment. Okay, the first one, investment in Merah. Investment in Merah here is only 15%. So 15% is considered type of investment here is at other investments. Yeah? Okay, and then the other ones, we're going to have hijau. So hijau here, your percentage shares that you have in hijau here is 30%. So this one is considered as a associate. Yeah, so associate. Remember that the treatment will be different. Yeah, other investments here is maybe fair value through others comprehensive income. Yeah. Okay, so this one is other considered as a others investment. This one is considered under associate. Yeah, so now the treatment will be different. So we need to look at what types of investment that you have previously. Yeah. Okay, the cost of investment you have the 20, and then fair value reserve you have 35 here. Okay, fair value reserve here is a value change. So value change here means that the changes in the fair value of investments. So when you have the changes in fair value of investment, you have 35. Okay, profit of shares here 40 for hijau. And then revaluation reserve, you have 20. Yeah. So type of investments that we have here. The first one, you have others investment. So others investment, when you have a value change here, we need to transfer from comprehensive income, others comprehensive income, transfer this one to return earning. Yeah. Okay, and then this one is associate. So for associates here, you have a revaluation reserve. Okay, this revaluation reserve need to transfer also to returns earning. Yeah? So this is we analyze how we're going to treat this one based on the percentage of share that you own, and then this type of investment, either that one is other investment or associates. Yeah? So look at here for the Merah, you have carrying amount of 55, and then for hijau we have 110. Yeah? Okay, and then for Merah, classify as fair value through others comprehensive income. So this is other investment. And then for hijau is considered as an investment in associate. This one is important because the treatments will be different. Okay. So on 1st of January 2018, Seroja increased its stake in the two companies. So they increased the stake. So now Merah increase of 40%. Okay, buy another share. You add another 40%. Previously you have 15%. Okay, and now add with a 40%, now it become 55%. So starting from 1st of January, you have a controls over merah. You're going to have a control over merah. Okay, look at hijau. So hijau at the beginning you have 30. Okay, then you add another 45%. So at the end you're going to have 75%. So both you already have a control over merah and hijau. So this is the amount of cash that you paid during that day to acquire 40% for merah, and then to acquire 45% for hijau you acquire 225 here. So the cash that you paid. So you assume that you already control for both of that company on 1st of January. So starting from 1st of January 2018, you need to prepare a consolidated financial statement. Okay, so based on the market approach, your consultant provide the fair value of two company as follow. So this is the net asset. This for merah and hijau. The NCI here is 180. The fair for the merah, and this one is for the hijau. And then the fair value. Fair value is fair value of the company. Yeah? So fair value of the company here is a fair value of merah and hijau. Okay, so this is a fair value here for merah and hijau. So now you need to calculate for a goodwill. So you need to calculate for a goodwill. So goodwill consideration here is on 1st of January 2018. So because during that time, then you start to have the controls over the company and also calculate the gain or loss on remeasurements. Okay. So we already calculate for this one. Now it become 45%, 75%. So for NCI, we have 45%. This one only 25%. So look at the fair value here. So look at for merah first. Okay, for merah, the fair value as a whole here is already given. So if not given, you need to calculate this one. So you need to calculate here based on the NCI value. So the fair value here is based on NCI, based on NCI value. So the NCI value here is given as 180. So 180 divided by 45% of the NCI here, going to have 400. So 400 is the value of the company as a whole, value of the merah. Okay, but in the question it's already given. It's not given. This is a formula to calculate the fair value of the company as a whole. How are we going to calculate here? We're going to use a fair value of the NCI as a base for calculations of the fair value. So the formulas here is the value of the NCI divided by the NCI portions here, 45%. So you're going to have 400. But in this question is already given. It's not given. This is the way on how to calculate the fair value of the company. Okay, and then you need to calculate this the fair value of the company because you want to find the fair value of the previous equity held. So previous equity held, you have 15%. So 15% times with 400. So you're going to have 60. Yeah? Okay, from that amount of 60, you already have the fair value of 60, and then you need to refer back what is the carrying amount here. So the carrying amount for merah is 55 here. So the carrying amount here is 55 here. So minus 55. So you're going to have here gain on remeasurement, which is 5. So that's why we need to calculate the fair value here. The carrying amount is already given step. Okay, so we're going to have a gain on remeasurements of 5. Okay. Actually, this is the second one. So we calculate the goodwill. So based on the goodwill here, the amount of the COI here 40%. You add another 40%. You pay 160, and then plus with the previous fair value of 15% previously. So you're going to have 220. Fair value of the NCI. So this 220 here is your COI. Okay, so NCI here 180. Going to have 180. This one is already given. So already given 180. So altogether you're going to have 400. 400 minus net identifiable asset. So net identifiable asset is also given 250. So you're going to have a goodwill of 150. Yes, the goodwill will be 150. Yeah. Okay, from 150 here, you're going to allocate the goodwill for parents. and also goodwill for the NCI. Okay, for parents that you have here is 220 minus net identifiable asset 55% time with 250. You're going to minus that amount. So you're going to have altogether here is 82.5 here. So for parents will be 82.5. And then for NCI here, going to be the difference that we have here is 67.5 here. Or can you calculate that one based on the prorates? Okay, prorates here because the value of NCI here based on the fair value. Okay, so you can calculate this one actually. Okay, or another method here, this 150 times with 55% for parents here because the NCI here is already at fair value. So you can calculate that one using rates here. For the safe parts here, you just calculate based on this one. The COI minus the NIE. Yeah? Okay. So the next one, you have the gains here. Gains we already calculate here. Okay, so the journal entry to calculate divide for the gains that you have here. Debit investment in Mera. And then credit gain on remeasurements here. Debit investment in Mera. And then gain on remeasurements. Okay, have that one. We have the one that we calculate here, 60 minus 55 here. So you're going to have 5 for this one. And then the other ones you have in the Mera here, you have fair value reserve. Yeah? You have fair value reserve. Remember that previously your type of investment is other investment. So this fair value reserve need to transfer to returns earning. So you debit others comprehensive income. This one is to record for the fair value reserve. Okay, and then credit returns and then transfer from others comprehensive income to returns and then okay. So we move to the next one. Reclassifications of others income OCI to the returns earning. Okay, and then we look at for hijau. Okay, for hijau here, company as a whole, the same thing, 125 divided by 25%, so we have 500. So previously interest held 30% time with 500, so 150. Okay, now I'm going to calculate the goodwill. So this is the one that you paid, a new one for 45%. Total up these two. So you're going to have 375. 375 here is the COI. COI and then plus with the NCI. Okay, NCI here is 125. So you're going to have 500. So net identifiable asset is given 360. So we're going to have a goodwill of 140. So goodwill 140 here. We're going to calculate for parents and also for the NCI. Okay, for parents here is 375 minus 75% times 360. So you're going to have here is 105 for parent. So it means that for the NCI here is another 35. Yeah? Okay, look at the journal entries here. Okay, gain on remeasurements, you have previously held the new fair value of 30%. 30%, so you're going to have 150 minus the carrying amount given is 110, the carrying amount 110, so you're going to have gain on remeasurements of 40. Yeah? Okay, so I'm going to look at here debit investment in hijau and then credit gain on remeasurement 40. And then going to have for the hijau here, we have revaluation reserve of 20. So this type of investment in hijau is associate. So for associate, once you have a translation reserve, transfer to P&L. Once you have a revaluation reserve, transfer to returns earning. Yeah? So this one that you have. Okay, debit revaluation reserve, credit returns earning 20. Okay, so that is what you have here. So you need to look at the treatments here, depends on what types of investment previously that you have. It will be different. Yeah? Okay, so I think that we're not going to proceed with the next one. So the next class, we're going to continue with slide 25. Yeah? Okay, please read that one. Slide 25. Maybe we'll allocate a few half an hour for if there is any questions. And then for the rest, we're going to continue with slide 25 for the next class. Okay, do you have any question relate with this one, with your notes and also if there is any questions regarding your previous tutorials. Details about your mid-sem, how many hours, okay, details we're going to discuss with the next class. How many hours, how many questions, I'm going to inform you in the next class. But I'm sure that is only 2 and 15. Okay, 2 hours for answering the questions, and then another 15 minutes allocate for the uploads your answers. Okay, we're going to discuss details about that one next class. Okay, any questions that you have regarding your notes or regarding your tutorials? Any questions? So next class, you're going to continue with slide 25, yeah? Slide 25 onwards. Okay, I'm still be around if you have a questions. Okay. Questions for two-part NCI. Okay. So for the rest, if you want to leave the meetings, you can leave the meeting. So I just want to settle with Laura questions.
Doctor.
Oh, attendance. You want to scan for attendance, yeah?
Yes,
Set Laura. They want to have a for attendance first. Okay. Laura, your questions for NCI, isn't it? Okay. Yes, scan for the attendance. Okay, what is your questions, Laura? Okay, why your friends scan for the attendance? I cannot show this one because they still want to scan for the attendance. Which one is your question, Laura? Which one?
Question 4, question 4 two, NCI part, why the add for URPBF?
Sorry, the add
URPBF.
URP brought forward.
Yep.
Ada kan?
Because I don't see tak lah, tak saya terpandang tadi.
Okay, you have a profit for the year 9852.
Yes,
Okay, URP carry forward 456.
yes,
Minus, minus,
yep.
Okay, and then plus URP brought forward 790400.
Yep.
Ada kan?
Ada.
Itu. Plus depreciations 304.
Oh, okay, saya salah kat situ. Okay.
Depreciation ada?
Ada, tapi saya minus. Okay, dah nampak dah.
Tu kena campur kan sebab
Ah,
based on the journal entry, you debit accumulated depreciation, credit depreciation expense. So once you credit depreciation expense means that your expense is reduced. So once your expense reduced, you're going to increase your profit.
oh, okay, doktor.
Okay. Other questions that you have? Any of you have a questions? Okay, if there is no questions, okay, please make sure that you prepare with your notes. Maybe you are a bit busy this week to prepare for the notes for slide 25 onwards. But we still have to discuss on that notes. Okay. So 25 onwards. Okay, and then we're going to allocate half an hour to discuss if there is any questions regarding your mid-sem. Yeah. Okay. I'm still be around if you still have a question. For those who want to leave the meeting, you can leave the meetings now. Yeah? Okay, if you have any questions, I'm still be around. Okay. Yes, any questions that you have there? We, Puah, we, Azim, do you still have a questions? Because I want to end the meeting now. If you have a questions, Chang, Lee. Okay, so going to see you next class. Yeah, going to going to you next class. Yeah? Okay, so I'm going to end the meeting now. Is it okay? Yeah. Okay. Azim.
Ya, Doktor.
Okay, nak tanya soalan ke Azim?
Tak ada, Doktor.
Kot lah sebab you tak nak keluar lagi. So, saya ingat you nak tanya soalan ke. Saya tunggu je kat sini.